is DG. I've been in this industry as much as my company has been. Tomorrow is our second birthday. We're going to be 2 years in this industry tomorrow. We are basically like a digital disruptor in this particular industry, bringing in the mobile wallet to do the money transfer business. The first of its kind in Malaysia to do money transfer using a digital wallet using the e-money license.
Okay, thank you very much. Sir.
So, good afternoon.
Kyril.
That's
Kyril. I pronounce it right. Kyril.
Yes,
Okay.
yeah. So, yes, the name's Kyril. I'm Chief Executive of Axiata Digital. For those of you who are not from this region, Axiata is a large telco group headquartered out of Kuala Lumpur. We have operations or telco operations in, I guess, Nepal, Bangladesh, Indonesia, Cambodia, Sri Lanka. I'm missing out a few, but you can tell already based on those kind of markets that we have, we do have a focus and a concentration of serving the needs of foreign workers. Within Axiata Digital, we now run one of the largest e-wallet businesses in the region, a total of about 5.5 million users spread across these various markets. I think in Malaysia, we're probably one of the largest e-wallet players now. Boost, which I'm representing today, very big brand here with about 2.5 million users. And obviously within that, a lot of, first and foremost, domestic P2P business, but very soon foreign-based P2P business. And then obviously, prior to my role as Chief Executive of Axiata Digital, I was actually the Group Chief of Operations and Chief of Marketing for the Axiata Group. And one of the things that I tracked very closely back then was looking at foreign workers as a large market segment, not only in the business of connectivity, but also in remittance and all sorts of ancillary services that we can provide for them. And with that, in that regard, we actually invested via our sister company here in Malaysia in a remittance business called Merchant Trade. I believe Rama, the Chief Executive, is sitting right there. Very successful business that he's now operating in. So happy to talk more and discuss more about some of the things we've been doing.
Thank you, Kyril. Thank you very much. Mr. Giriyan, how are you?
Good afternoon. I'm Sudhesh Giriyan. I'm the Chief Operating Officer of Express Money. We are among the well-known international money transfer organizations. This company has been in existence for the last 19 years. We operate across 165 countries. We pay out across more than 200,000 agent locations. We also do account credits in more than 60 countries. We put money onto mobile wallets in more than a dozen countries. We have a great mix of partners across the globe that consists of some renowned banks, non-banking financial corporations, retail partners, telcos, the list goes on. We are among the fastest growing money transfer companies in the world. That's it in a nutshell.
Yes. Okay. Thank you very much. So we have some questions that we have prepared. So I'm going to ask them. And if you want to make a comment, there is the app. But I'll do the best I can to have enough time at the end to get some of your point of view, so you can raise your hand. Now, because it's a small group and we don't want anybody to fall asleep, if you have something that you want to say, you can raise your hand. As long as it's brief, I'll let you talk, so we can do a little bit of a conversation here. So I'm going to start with the first question to Sudesh, okay? So the question is, now, in view of the current market situations, how do an MTO have to differentiate their services to compete? And do you think strong brand names are still important?
That's a great question, Hugo. See, today what's happening is that there is nothing much to differentiate between what one IMTO offers and what the other. You typically end up partnering with a brick and mortar agent in any of the country, and then the business starts. But what's very important here is to meet the customer expectations. What the customer wants today, there are three things. One is, of course, speed. The other one is convenience, and the third thing is cost. When we talk about convenience, it is basically accessibility. How accessible the agent location is. Do I have a location next door to go send money? Do I have a location for my beneficiary to go pick up cash the next minute? So that's the question. So the more you have reach, the better your services will get popular, the better your services will get used. That's number one. Number two is speed. Gone are the days when people used to wait for 48 hours or 72 hours for the money to be picked up or money to go into an account. Today, the customer, regardless of the channel, be it cash, be it money going into account, be it money going on to mobile wallet, they want it the next minute. So that is the customer expectation today. If it doesn't get into an account or doesn't get paid out the next minute, you get a complaint, right? So that's the customer expectation today. You got to meet it.
And any complaint brings cost, because you have to take care of that, and et cetera, et cetera. So absolutely. The idea is to avoid complaints as much as possible.
Correct, absolutely. So speed has become a prerequisite today. You've got to deliver it the next minute. There is no second choice. And the third and most important thing today is the cost of remittances. I think we have spoken so much about the 5x5 initiative, which took off in 2009, basically driven by the G8, G20 countries, and they had this great vision to bring the cost down from 10% in 2009 to 5% in 2014. When the G8, G20 countries took stock towards the end of 2017, they found out that the cost of remittances is still at 7.32%, right? Even after using 3 more years beyond 2014, the cost of remittances still stand at 7.32%, which is still very, very high. And now the countries talk about moving to 5% in the next few years and eventually a 3% level by 2030. I think it's still a long way to go. Having said that, an operator like us still operates at a much, much lower level. We are at 2% in terms of cost of remittances today, right? Mm-hmm. That is something which is very important from a customer perspective. This is where the differentiator can come in. Today, there are international money transfer organizations that still operate at that level. Otherwise, the world average will not be at 7.32%.
So what you're saying is you differentiate yourself with the how large your distribution network is, cost,
and speed.
And speed.
Yes.
Okay.
Yes, absolutely. Plus, how can you add value to the customer? For example, I can share what we have done over a period of time. We are one of the first companies that kept on sending messages, text messages to the customer. For example, the moment the transaction happens, we have a 16-digit XPIN number, which is a unique reference number, that is sent to the sender. Then the sender sends it to the beneficiary, so that he doesn't have to then spend in communicating the XPIN number one. Number two, the moment the beneficiary picks up cash on the receive side, the remitter gets a message saying that the money has been collected. So, he doesn't have to really spend in communicating the reference number and also finding out as to whether the money has been received or not. This we have been doing from day one of our existence. Number two, we are, I think, among the, very few companies that doesn't charge a back end. For example, there are instances where customers get charged on both sides, on the send side as well as the receive side, but we charge only once on the send side. The third thing is that for whatever reason, the customer comes back and cancels the transactions after having done the transaction. If the transaction has not been paid out, we cancel it and we return the entire amount, the principal amount as well as the fee that is charged. Entire amount is returned. So these are all some of the value additions that we have brought in. I think these can also be seen as differentiators from a customer perspective.
What about, let's go with Gabriel. What's your point of view on the differentiation of services?
So I would start with the premise that if you look at the service as remittance, that's the wrong question to ask. Because when, again, as I said before, when we were looking at the foreign worker segment, it is an overall customer journey that they're going through. Right, from the time that they make a decision to go to another country to seek an occupation, all the way to the time that actually land back in hopefully their home village with some money and some additional money to kind of just spread the wealth around. And when you look at it in that way, the entire customer journey, it is a whole host of service that you want to be able to provide then, that then gets their trust, right? Let me give you an example, right? So, by the way, for those of you who are familiar with this and where the customers are coming from, if you take a source market like Bangladesh, The foreign workers here in Malaysia, as an example, from Bangladesh, they don't come from Dhaka, they don't come from Komala, they don't come from Chittagong, they don't come from the big cities. They come from a village in Mymensingh. They come from a little village outside of Sylhet, which is about 200 miles north of Dhaka, right? They come from these poor villages where they now are looking for a job opportunity outside. They don't have the money individually to send to come to Malaysia and work, because you've got the airfares, you've got the employment agencies' fees, and so on and so forth. So the whole village will pool together and contribute towards some form of fund such that this person can pay for all the relevant fees, all the necessary travel to kind of come over and work. And this guy comes here, he starts his occupation, he goes like, wow, you know, I have no connection with my family, right? I haven't spoken to them. And oh, by the way, the journey doesn't sort of start with that transfer here, because he then goes to Dhaka, and if he's lucky, he gets shipped on the next, you know, plane out, but typically they'll be sitting in a center waiting for anything from 2 weeks to 4 weeks. In the meantime, by the way, he's not now taking the vegetables that he used to sell in the town, so no income for the family, right? If you walk every single step of the way through, this is a comprehensive journey for the poor individual who's now looking for an opportunity to come and work. He lands in Malaysia, he works in a construction industry, you know, and hopefully everything goes well, but you know what, maybe he falls down, right? He breaks his arm. Return on investment on the entire village disappears. Right. Again, you're thinking about sort of other businesses that you can sort of layer onto him. And by the way, when he then goes back, right, now how does he then deal with the additional wealth that he now has? So to me, it's not just about remittance. To me, it's an end-to-end value proposition that encompasses communication, content, all the sort of micro-financial services that you can provide for this individual, be it micro-insurance, micro-remittance, micro-savings and investments, all the way to the end when he then comes back and then actually provides for the family.
So let me see if I understand. What are you saying? What you're saying is you feel that differentiation comes from a number of services that person, that worker has connected to the fact of going someplace and sending money. So you're looking at the differentiation on a more complete set of products. That's what you think that differentiation comes?
Well, I guess you can call it differentiation, the way we like to think about it. And again, so Axiata Digital has a very...
differentiation because you need to differentiate yourself from your competition.
Well, we think of it slightly differently, right? So in our sense, and maybe because Axiata Digital has a very startup mindset, we look at pain points that the customers have. We look at what parts of the ecosystem that there is a market failure in, right? And right now, if you look at every step along the way, there is a market failure. So it's not about differentiation, it's actually just about provision of service, because those services are actually missing right now. You know, for a poor individual that's landing.
Okay, so I'll really say, so your differentiation comes from looking at what is happening and coming out with solutions for those pain points.
Correct.
That's where you see it.
Yeah.
Okay.
Yeah.
Okay.
Yeah.
Mr. Rao, what do you think?
I think Siddesh and Kairal both have added all the points there. But then in terms of differentiation, the clear differentiation would come in terms of actually solving what the problem customer does have today. By giving what Siddesh said, that, you know, in terms of speed, in terms of cost, and in terms of assuring that the money is there the next minute, there's something that still, which is the pain point, which is the self-service. Probably if the MTOs start focusing on the self-service, where the customer can send the money on his own by using technology as an enabler, using the mobile wallet or the app through the computer, I think going back onto the MTOs and standing in the queue and taking off for that particular day, that's actually probably diverting the customer to move into informal channel. Because the money is required the next minute, but he is not able to travel that 40 kilometers from the estate or from the construction area where he is working. But if it is made available in the mobile, probably he will be able to send it from the location where he is. So that probably would be able to differentiate, and that's one differentiation which definitely all the MTOs should now start looking at. The second one is, as Kairal said, yes, there are a lot of products that can be given to him. Insurance is one other product. And then the telco reloads. and all these kind of products which are made available to him in the app, then it becomes a lifestyle app for him, which will actually incentivize and motivate him to actually continue to use that. So these are the differentiations which you can actually start working on.
Look, can I say, I'm going to say something. I agree with all of you. I mean, really. The thing is, we all have great ideas, really, and they sound good. You know, we're worried about our customer, we see the pain points. What the customer does at the end, it is not always what we expect them. First, because even though we try to understand the customer, we're not the customer. We don't go through the pain that they got. There's many cultural, socioeconomic differences. And so I do agree that you know, there's so many companies that have tried to differentiate with other products. There's a lot of failures in the industry. There's a lot of companies that even with the best intentions in their hearts, we're never able to go through with them. Why? Because the consumer will not pick it up as fast as we thought. And sometimes, yes, it's our own fault, sometimes no. So I'm going to go with the second question into have you seen failures? I mean, can you point out? It's a difficult question because it doesn't have to be your own failure in your own company, but have you seen failures of very good intentions by money transmitter companies that were not really happen or have not happened? I'm going to start with you, the second question.
Hugo, I think we just missed out on the second part of your first question.
Okay.
I think you asked as to whether brand names are still important. I think we didn't answer the question. I just remembered that we didn't answer that question. Should we take that up before we move on to question 2? Is that okay?
Yeah.
I think it's okay. Brand names are very important in terms of giving that trust to the customer. You know, it's a hard-earned money. You know, if you look at the migrants internationally, you know, be it a Filipino, be it a Mexican, be it a Pakistani, be it an Indian, typically the average ticket size, as we call it, for money transfers is about $400. When that kind of a, you know, remittance is being sent, the remitter would like to make sure that he is putting his money in the right hands. He should trust the company that he is sending the money through. Very, very important, right? This is not relevant just to money transfer business. This is relevant to most of the businesses. For example, in my own case, you know, in October this year, I'm taking a long haul flight, and then I have to hop from one side of the world to the other side. When I was doing my booking recently, I had to pick up an airline that I'm not very familiar with. Right now, I'm checking as to whether that's a reliable airline. Can I take a chance? So similarly here in remittance also, when a customer wants to make use of a service, he needs to be doubly sure that the service that he is using is safe and his money is safe. Very, very important.
Yes, and I agree, and we go back to the branding aspect. You need to trust. And yes, you try, and maybe you go on. I mean, this industry is built by loyal customers. I mean, and we as money transfer companies, that's what we want, because the cost of acquisition of a new customer is pretty high. So let's go to my second.
I challenge that statement a little bit.
Okay.
Because how does a village boy sitting in Madura who's going to come here and work for some of the plantation companies in Malaysia, how would they hear about brands, right? You know, again, if you visit some of these dorms and you try to understand a little bit kind of where they're coming from, the first point of contact or the point of reference for them to think about MTOs is actually the senior who's been here for a little bit longer, right?
Exactly.
So he's going to ask the guy, like, hey, how do you send this money back to your mom in Madura, right? And he's going to say, oh, you know, I do it too, you know, merchant trade, I do it through value, I do it through everything else. And up until that point in time, he has no idea of the brand. Now, how did the senior find out about it? Again, same word of mouth. So I really kind of question the value of sort of brand and the pervasiveness of the brand.
That depends really on the market and the corridors. Because I assure you that I could make the statement, and I'm not for blank statements, but I could say that most everybody that is going to migrate learns so much information. They know. It's not going to be the first one that comes. They already know how do you send the money. They know the cousin is there, the other. I mean, migration also happens with towns, like you said, and families. You know, it's a cousin that goes first and the second, and normally is the most courageous person, the pioneer that goes first. They already know a lot of information. I know that's important, of course. Then come cost, and then other products. I understand for the new companies, they have to establish themselves and they have to find the ways they can compete with the bigger brands. It's always happened. I mean, through many conferences, we can criticize the big brand names, Western Union and MoneyGram, but they were pioneers. They opened the forest, and then the others went on the back trying to see which ways to do better. But let me go back to the question. Okay, I really want to see if I can point out to things that we feel have failed, and whether we learn from those failures, because I come from the position that we don't really learn. We keep making those mistakes over and over. But you know, maybe you have better examples that I have.
Okay, I mean, just the best example in terms of learning from the failures of others, and then actually learning from the data that you have. Just to talk about value, when we started our service, we had very high and very, very rich data because our partner was actually having about 50% of the migrant market share, and then we had that information to learn from. What we did was we learned the financial habits of migrants in Malaysia, and then we tried to understand what are the pain points. If you look at that, it's everybody believes that, you know, the migrants are actually looking for low rates, higher rates and low sending fee. It's not. Actually, they are actually looking at simple process, and they want a value for their money, and they want a convenient location. If you come and look at the survey that we did, these were the numbers that were coming to us, and then we actually designed a product in such a way that the problems are being solved, and they're going to get a solution for the problems. And then what we did was we actually committed to deliver an innovative product which is cheaper, which is accessible, and which is real time. This is actually what we actually tried to deliver. And we did not have enough money, and we did not have enough time to fail. We learned from others' failures. These were the corrections that we had taken. And to stay within the Bank Negara's regulation, this was extremely important for us. Being an e-money operator, we did not have again time to go and make mistakes. So we had to stay within the regulation limit. We had to leverage on the existing infrastructure that we had. We had a telecom distribution infrastructure that we had to deliver the service. And then we also aimed at giving the extended financial product for the customers. So this is what we actually learned from others' failures, and this is what we learned from this one. Also, we had other grants from EFAT to particularly push the products into Pakistan. We came up with a very innovative product from wallet to wallet, and then we had the grant from EFAT to actually do this to the rural Pakistanis, which was very well accepted, is because nobody else was offering this service. Moment you send from here, the money can be immediately cashed out from the wallet from the nearest village where the person is staying. And this also actually helped us to build the product. So my point here is that it's very important for people to understand what problem are we trying to solve of the customers. If we are not actually addressing that, and if you're not paying attention into the data and converting that into insights, and not designing your product to actually solve the problem, you're bound to have this problem in terms of ending up into a failure.
Good. Any one of you want to add something, or should we go to another question? Whatever. You want to add something?
We are here to share our experiences in any case, right? If we are not doing mistakes, then we are not learning, right? So there have been a lot of mistakes, but then we have learned and we have moved on. If I have to share some experiences, then I can talk about one of the corridors, which is UK to Pakistan. Incidentally, in our case, we have many countries where we have something called anywhere payout, which means that on the termination side, the beneficiary can go to any of the locations. There is no compulsion that he should go to A location or B location. He can go to any location in that country and pick up cash. So we launched anywhere payout way back in countries like India, Pakistan, Bangladesh, Philippines, many African countries. And then, we started sourcing a lot of business from UK to Pakistan. But somewhere down the line, we saw the numbers stagnating and the numbers started dipping. I think we had not kept an eye on what was going on in the market. What was happening in the market was that there were players in the market who had found a way out to grab market share. What they did was, for example now, in anywhere payout, what happens is you come up with something called weighted average rate. Let's say you have 10 payout partners who offer you 10 different settlement rates. And when you offer the rate to the customer, you have something called weighted average rate, which means that the weighted average rate is worse off compared to the best rate. But it is better off compared to the worst rate, right? But in the process, you may lose out. If somebody is offering direct partner payouts in that particular country, you may lose out because your weighted average rate is never better than the best rate. So we saw this lacuna and we tried correcting it. We had almost similar set of partners. We started offering direct payouts, right? By offering a rate that was shared better than what the competition was offering. And we also pooled a lot of other partners under the anywhere payout system. So we had both options. We had direct partner payout rate. We also had the anywhere payout rate. This was a lesson learned from what was going on in the market.
Good example. Thank you. Anybody has any example of a failed service or corridor or something? No? Okay, let me go to so because we're talking about emerging money transfer business models. Of course, we're going to talk about technology, of course. Before we jump into technology, because it's the obvious answer that emerging business models, and we can see it from Value and from Axiata, they are leveraging technology. But we'll talk about technology. Non-technology business models that have proven effective. I'm going to start with Sudesh because you're the person with more time in the industry. And then we go to the younger, more technologically inclined companies. So let's start with you.
Hugo, whether it is fintech or non-fintech, I think technology is the backbone, right, of the money transfer business today. When we offer a platform, it is actually backed by technology, right? We constantly keep updating our platform, so there is technology in it. We keep on adding features from time to time. There is technology behind it. Last year, we launched 3 new offerings in the market. One was Express Money Biz, which is an application software which the agents can make use of. It's a readily available software, and an agent can just switch on within no time. So it's called Express Money Biz. We also came up with something called Express Money Flex. Today, for example, we have some great names that we have partnered with. ADCB Bank, one of the well-known banks in UAE, another bank by name RAK Bank, and a bank called Commercial Bank of Qatar in Qatar, and a very large online player, World Remit, I'm sure. Catherine Wines is sitting somewhere here. We partnered with them about 1.5 years back. So all this was under the umbrella of Flex. What Flex actually does is that Flex is nothing but an open API, and the API has all the channels built in, the cash remittances, the account credits, the mobile wallet credits, door deliveries, everything is on one API. So Flex has become, very, very useful, something, which is completely backed by technology. We also launched what is known as Express Money One last year. Express Money One is something which caters to the non-financial institution category. Whatever I spoke about just now, the banks and the online players fit under they come under the financial institution category. Express Money One caters to non-financial segment, which means that, for example, let's say there is a very large retail giant in the US wants to get into remittances, for example. Express Money One offers the entire infrastructure, the license, the compliance, the global payout network, the contact center assistance, everything comes on one platform called Express Money One, and this is something which is completely backed by technology.
So do you think there are non-technology based solutions that can be emerging as business models for this industry? Because what you just told me is basically you believe that technology is really the backbone of any innovation.
Correct.
As
Absolutely.
we go forward.
Absolutely. See, whether it is brick and mortar or digital. For example, now we are in the digital space also. We have the online platform which is available in certain markets. So this is something which is always backed by technology. Yeah.
Okay. You can, yes, Prasam.
I can just say that, to stay competitive, it has to be technological innovation. Because if somebody else is going to be more innovative than you, and you will lose out in the competitiveness. So I would just like to say that to stay competitive, you have to be innovating every time, and technology is the best thing to use. Once you used the innovation and you passed on that benefit to the customer, there is a reduction in the cost. So once the cost is reduced, he's always going to be with you. So to stay competitive, it's very important that you need to keep innovating.
You want to?
So my point of view, the technology and the platforms already exist. It's some of the offline problems that needs to be solved before the pervasiveness of those platforms can be a little bit higher than what it is today, right? So I think we've all talked about it, right? The idea that for me as a foreign worker, I don't need to travel 40 minutes by bus in to go see an agent, to go give him the cash, to then get sent to someone else on the other side who then has to travel by bus for 40 minutes to another agent to then collect the cash. Like you literally want to just be able to tap it on the phone, not even a smartphone, a standard feature phone using USSD. Those platforms are already there, but you still have some, kind of real world offline problems to solve. How does the money actually get into the so-called wallet in the first place, right? We have to solve the wage disbursement issue, right? Such that, big employers or foreign workers will actually not send money by cash, on a motorcycle to distribute in all these dorms, but actually to kind of shoot it into their wallets, into those e-wallets, right? Et cetera, et cetera. So there are all of these offline problems that needs to be solved before the technology can be fully deployed.
Well, let's talk a little bit more about mobile, because we know that we've been talking about, every one of you have mentioned mobile as a solution. There are many ways mobile money is being used, and there are many countries where it's not being used, even if the solutions are great. So I want to ask you, what is your point of view with regards to those solutions? I mean, because it's not only the technology. You just said it, Kirill. The solution can be great, but it just is not adopted. So let's talk about adoption here. I want to hear your point of view. So we'll start with Prasanna.
I think you brought up a very right point here. Adoption is not going to be easy because it's a behavior change. Because 3 reasons. One is they are not digitally literate, first of all. Second, they are not literate. Second, they are not digitally literate. And third, they don't touch and feel. So when they don't touch and feel, they won't put their hard-earned money into the mobile wallet, what they cannot see. So that takes a little bit of time. So what we'd actually done is we have these ambassadors in every of the dorms or the hostels or the estates. And we make them actually kind of as the ambassadors to start sending the money. And then they experience it, and then the word of mouth spreads. Like nothing better work, because these guys, this particular community is media blind. You can't go on any ATL to just talk about your wallet. They are not someone who will even believe that such a thing can happen. So we have these ambassadors who talk in their language, and they experience it, and they are able to get the money in the next minute at the receiving end. And then they see that we also actually kind of incentivize to keep some kind of balances in their wallets, incentivize to send through the wallet, and then the word of mouth keeps spreading. if if you're going to talk about a brand or an awareness to be created for a brick and mortar is 3 months, probably mobile wallet, probably it would take from 3 to 6 months. But then you have a chance to lose that customer in the brick and mortar, but in the case of mobile wallet where he sees a benefit, there is a lot of incentive for him to actually use this. He is your customer forever. So answer to your question is, adoption is not easy. It takes time, but definitely they will always use it as long as there is some incentive for them in terms of convenience and in terms of their money being safe and in terms of the money being cashed out in the next moment at the receiving end.
Okay, Gabriel.
I agree with you, adoption is going to be an issue. But I think it's going to be an even bigger issue if the only use case of whatever solution you're providing is remittance. Right, and go back to that same premise that I started with, right? Remittance is not a high velocity use case, right? You don't send money to your mom every single day, right? But you do buy food every day. You do consume content every day. You want to catch up with the news every day, right? So if you can create a little bit more of a comprehensive solution that allows people to kind of have engaged with the solution in more than just sending money, then the trust for the solution becomes a little bit more, the trust starts building, right? And so if you look at a number of what our subsidiary companies are doing, what our solutions are doing, it's actually that, right? It's making sure that we procured the content, be it Bangladeshi music or up-to-date news from Indonesia or whatever that might be, such that we can then deliver it as a solution. And then there will be other use cases that requires payment. There will be other use cases that requires financial services that then then builds the trust, such that when they then go into a low-velocity use case like remittance, that's no longer an issue because I trust you enough to kind of buy my nasi lemak with your wallet. But then when it comes to sending money, ooh, that's a big sum. I only do it once. If it's a single use case, then first time around I want to send 900 ringgit as you said, or 600 ringgit as you said. A little bit nervous, right? And the next month comes around, I haven't kind of overcome that trust hump yet. And then the next month comes around, I still haven't overcome that trust hump. So you're in this kind of no-win situation, right? So, I think if you build a solution that has other engagement opportunities with that solution, then you're already slowly starting to build that trust, right? And that's what we're trying to do. Yeah.
Good point.
I completely agree with Karel. Instead of making it as a remittance app, maybe make it as a lifestyle app where he can do a telco top-up for himself here, telco top-up for his loved ones back home. I think the usability and the use cases are more. I think that then there is a more chances of he actually adopting it much faster.
I completely agree. I think it's all about building a comprehensive solution, offering more value to the customer. Just look at the M-Pesa example in Kenya. I think M-Pesa has become a household name because of whatever value Safaricom has been able to offer to the customers, right? In 2007, M-Pesa was born. In the last 11 years, they have built a fantastic ecosystem in Kenya. When money flows internationally onto the mobile wallet in Kenya today, the customers can do everything that they just mentioned. For example, they can do bill payments, they can do insurance payment, they can pay for school fees, and they can do P2P, domestic money transfers, and so on and so forth. So there is a value that is already seen by the customers, right? So buoyed by the success of M-Pesa in Kenya, I think the mobile wallet revolution then got spread in markets like Tanzania, Uganda, Ghana, now Nigeria. I think across Africa, the mobile wallets have really taken off. And one other reason for that to happen is the poor banking network in Africa, right? Customers did not have bank accounts. The financial inclusion was at its lowest. So this is how, in 2007, M-Pesa came into existence, and there has been no looking back.
So Sudesh, you think the traditional business model, the agent cash-based models, will survive in this environment? What do you think? Just looking ahead, do you think?
Definitely, I think cash is king still. The brick and mortar is going to continue for the next many years. I've been sharing these statistics, very often. Globally today, if you look at the cash to non-cash is 94-6, right? Look at some of the examples across the globe. Look at the Walmart model in the US. Now they are talking about the digital app, etc., going forward. But then traditionally, for the last few decades, Walmart has done brick and mortar remittances. Yeah, as much as you see in the Middle East, people lining up at an exchange house for remittances, you see the same thing in Walmart in US and across many other retail locations in the US. Out of the $148 billion, which World Bank says went out of US last year, a predominant portion is still cash remittances. People pay in cash, people receive in cash. Look at Mexico, for example, which is a $25 billion market from the US, right? 95% plus is cash in and 95% plus is cash out.
And I tell you something that is very interesting. Discussing this subject with the cash management companies, technology is making cash even cheaper. So technology is also advancing the distribution and logistics of cash. So, and as banking institutions don't want to touch cash, the companies that are managing cash in many countries, even distributing, resending, storing, all that are doing it even much, much cheaper than banks. So I always tell money transfer companies, it's going to be very, very hard with digital payments to compete in cost because the cost of cash is even going down with technology. And when you have a digital payment, and I'm just going to throw it for your points of view, and maybe some of you wanna join in, is that in digital payment, every time, every loop, every jump, there's somebody making money. There's somebody charging something. In cash, it's not always the case. There are companies that have cash, then they can get rid of it and will pay for it because it's a cost for them. So just as a food for thought, I see the three of you want to jump in. So
no, actually, I just want to say
okay,
one more thing.
Sudesh.
Not that digital remittances do not have a future. They do. They certainly do. But you know what we had anticipated or envisaged a few years back, saying that digital remittances are just going to take off, they'll go through the roof within no time, hasn't happened. The pace has been abysmally low.
Yeah, so go ahead.
I mean, if you see the cost for the mobile wallet today is the cash-in cost. And if this, as Kyril said, that if these offline things can be actually plugged in, and then there is no cost. And all this cost will be passed on as a benefit to the customers. And when this goes as a benefit to the customer, and then definitely you can see that the brick and mortar will feel this pressure. Not to say that they will have this pressure immediately, but then once the cash-in is going to go digitally, maybe the salary is getting into the wallet, or the money being transferred from the bank account into the wallet, there is no cash-in cost. And that's the cost that mobile wallets are actually having the pressure now on. Once this is eliminated, then definitely the customer is the king there because he gets all the benefit of the cost.
And maybe I would be wrong here, but the numbers that you just talked about, kind of 90-10, 10, maybe in 5 years that number will be reversed.
Absolutely reversed.
Right, because as what Prasanna said, there are some offline issues that we need to address, but there's a lot of economic value and economic incentive to crack that. And once you crack that, that value would then be transferred back to that, and people will focus on that, right? We are focusing on that, right? I'll cite two other examples. So the CEO of Boost in Malaysia, by the way, he's the former CFO of Safaricom. So he, and you'll hear the stories that he almost shut down M-Pesa because like any dutiful CFO, he's going like, why are we burning so much cash in this little initiative here, right? But he saw what it could be, and he's now kind of come to Malaysia and helping us implement a number of these little things, right? But when you look at some of the statistics that happened with Kenya, with Safaricom, that number flipped very, very quickly. It came very suddenly, right? 3 years ago, 4 years ago in China, cash was still king. My son studies in Shanghai, by the way, so once in a while he'll come back for Christmas, for holidays. And the last time he came back, I gave him some Malaysian ringgit, cash. And he looked at it and he says, what's this? All right. And in all his time that he was in Shanghai, he didn't touch cash, not at all, not a single time. And it's like, what about food? No, nothing. Travel, food, books, everything, all done without cash, right? the last bit of warning, and maybe this is from telcos, right? Once upon a time, we had this major business called SMS, right? It went just like that, disappeared overnight, right? And that will be the same, right? The agent business will go.
Yeah.
Well, actually, let me say,
yeah,
okay.
Can I just take one more minute? Now, just referring back to what you just said, you look at the top 10 send countries in the world today, starting with US. I just mentioned the numbers, $148 billion, and then next comes Saudi Arabia, then comes United Arab Emirates, then comes UK, the list goes on. You look at each and every market and you just see as to what's happening on the paying side, even today. You look at Saudi Arabia, it is, I mean, hardly any digital contribution. You see people going to the likes of Al Raji or Bank Al Bilad and so on and so forth, okay? All done through a typical brick and mortar model. Same is the case with UAE. All the exchange houses in the UAE are playing a major role even today. The US example I already gave. Look at UK, for example. You go to the streets of UK and see where the remittances actually happen, right? If you look at the top 10 send countries which contribute to, let's say, 65% of your overall remittance numbers, you would see that even today, the brick and mortar, the cash paying is thriving, yeah.
Now, I want to say something. This intermediating agents, it's a complicated issue. You said the cash in, cash out is costly. The agent is making money there. Agents, and if you've been to sending markets, migrants, they love to congregate in many places. In Asia, you go to the Filipino center in Hong Kong. In Latin America, you have the cities where they congregate because going to a place carries a human side of that. You go to these places and you talk your language and you get the newspaper and you are there. You maybe happen every Saturday or every Sunday, depending on the city. So there's a human aspect to going to an agent. Okay, you can disintermediate the agent. The agent is going to keep on playing some role in the community. It's like a little embassy of your country. So there's an aspect there in the sending market of the agents. In the sending market, very few banks have been successful. Very few. In the paying side, is easier. You just pay it. It's in an account. Some of those market mobile money. But in the sending side, it's becoming a little bit more complex. So my question here it is, make the distinction between the two sides and see what are your thoughts, Sudesh?
Yeah, absolutely. I think it's a good point that you brought up, Hugo. As much as we spoke about cash paying on the send side, brick and mortar on the send side, on the receive side of the business, the things are pretty different. Look at India, $69 billion. Of that, about 80% goes into accounts, right? It's non-cash. Look at China, of the $64 billion, 97% is supposed to be money going into account. So if you take these examples, there is a predominant portion of remittances going through the non-cash channel. So quite a contrast, right, between send and receive.
Yeah. Your point of view. What about, let me ask you then the question, is there any way we can include the agents in the digital revolution? Is there any way we can because we will, if we don't, we're going to disintermediate a lot of businesses that in many countries are ethnic people working for their own people, serving their people. We, in a way, are disintermediating them. Is there any way we can get the agent in this digital revolution?
They definitely have a role to play, because initially when you are starting, as I told earlier, this community, more so that you're dealing, how can you reach them? There has to be this agent coming into picture. It's just about how you're incentivizing him now and looking at the journey cycle, how matured it is, and then you withdraw and then you start incentivizing him in a different way, where he just starts getting the money in terms of volume, and then you kind of give this cost benefit back to the customer. If you ask me, the answer to your question is yes, there is a role for this agent to play initially, because these people meet people, they talk to people, and they are the catalysts to actually get this. But then always these agents have a fear in their mind that, today or tomorrow, I am actually preparing this customer to be going away from me because I am making him prepared to send self-service. But then we'll have to give them a kind of an assurance that the way of incentivizing would be changed, and then this is how your volumes will start coming in. They will continue to be there.
So I think I kind of partially answered the question already with this view that if you provide a solution which is a little bit more comprehensive, the full disintermediation of the agency model will happen. Having said that, though, I think there is a role in a future for someone, right? And maybe we won't call them an agent. And in fact, actually, the traditional agents need to kind of reinvent themselves a little bit, right? Almost as you said earlier on in the conversation, sort of community ambassadors, if you like, right? That actually helps them in the new society, in the new location that they're in, right? And that in the specific use case of remittance, that they are actually the ones kind of, helping companies like ourselves promote and sell in the digital way of doing things, which is much lower cost than the traditional models, right? So I think there is a reinvention of that particular role, as opposed to just single-minded, single-focus remittance agent, right? That to me, I think, will go away very quickly. Yeah.
I think it started happening. If you really look at the Saudi remittance scenario today, for example, there is a bank called National Commercial Bank. When they started in 2009. They started offering remittances. Right from day one, they started sourcing through the ATM CDMs. This was 2009. For the last 9 years, they've been sourcing the remittance business through the ATM CDM. The registered customers can walk to a cash deposit machine and do a remittance all on their own, right? Looking at the success that they had, many banks in Saudi are today looking at that model. Now, the remittance business in Saudi is completely dominated by the bank. Each bank has a remittance arm, and the remittance arm carries out the remittances, right? Now, looking at the NCB's success today, most of the banks in Saudi are looking at a model where the customers who are registered can walk up to a machine and do a remittance. Even in US, for example, there are partners today, there are retail guys who are switching to a non-brick and mortar. For example, they will have a machine sitting in the corner of the shop. It's a kiosk which can offer an end-to-end remittance solution. They will not play any role at all. Their frontline will not touch cash. They will not do anything with regard to remittance. The customer who is registered can walk up to the machine and do the remittance. There is another model which is fast evolving, which we call as fix and pay. You do a transaction on your mobile app, then you walk into a store to make a payout. At least the first half of the transaction cycle is carried out on a mobile app, right? And for the second, for a customer who is averse to paying online, he or she can then walk into a store and make a payment.
Now, I'm going to add something that is interesting. The money transfer industry has relied on agents for years, since it started. And now banks are going into the agent model. I mean, there's a lot of countries and regulators who have proved correspondent banking. And now you have banks having agents for a number of their operations. So does it mean that banks are going the other way, and they're just food of thought? Questions? I have more questions, but I would like to hear some of you. We have 10 minutes, so if there's a question, a statement, if you want to throw, yes, please. And introduce yourself. Yeah, you just turn it on, I think. It doesn't work? Can I ask to change seats? You can come and use my mic, too.
I'm Supriya Singh from RMIT University. I'm an anthropologist of money and feel that I need to speak for the consumer on the ground. There's a huge gender gap despite fintech. And in many countries, women are absent from the fintech thing. And I want to take up Hugo's point that sometimes it's the technologies that are enabling the cash transfer Mobile wallets are doing it now just like ATMs did it before. Want your opinion on perhaps a real culture clash here. At the ground level, people want to use a number of different forms of money and channels for different kinds of payments. And if we are sitting over here, you still might want to put Malaysian ringgit cash in your son's ang pao packet. All right? You may not want to put a digital token in his ang pao packet. Is there a cultural clash between the model of a cashless, efficient economy that people who are promoting financial inclusion have, that's totally contrary to payment and transfer practices on the ground?
Love your question. Thank you very much. Who wants to try to say something?
So maybe I'll start.
There's no tomatoes or anything. They're not going to throw anything at you, so you can say. You know.
Actually, I wish there were. So let me start. I think the whole basis of what Axiata is trying to do in a financial services sector is to serve the underserved. All right, so in every single one of our markets, be it in payment, in insurance, in remittance, in savings and investments, in all these segments, we feel that the unit economics based on the current banking model does not provide an avenue to serve the underserved. And it is effectively our mission to go solve that problem, right? As an example right now, when we launched Boost, we announced that MDRs will be 0, right? And that's because we wanted to bring digital adoption to the merchant ecosystem that it is out there today. So, you know, if they want to adopt an electronic payment, solution with some of the EDM suppliers and whatnot, there is an MDR there. We have set MDRs at 0. So effectively, they can adopt our solution for 0 fees, 0 charges, right? And therefore, whatever they do, harden that. But where do we then, you know, sort of, where do we, if you like, kind of go further from here, right? That's step one. Step two then is in lending, because once we have the merchants using our solution, and in fact, we've actually built the engines, so there can be scoring engines that then can say, hey, look, you know, we've looked at your pattern of transactions. If you are interested in a working capital loan, we can provide you that solution, right? And in fact, actually, we are starting to look at that. So anybody here that visits kind of the street markets and the hawker centers in Malaysia regularly, you'll know that actually one of the important purchase item for them, those diesel generators, right, that powers on the lights and everything else, they cost a little bit of money, right? And for some of these new merchants, can't afford that. So right now, based on their transaction patterns, right, these are street merchants, right, street hawkers, we're starting to see enough of a pattern that says, hey, look, you know what, we can actually, you know, score you for some kind of credit product, and if you want to, we'll actually provide you with a working capital loan, right? And so that's effectively sort of the next step. We talked a little bit about microinsurance, right? The foreign worker segment is an underserved segment, and we have, you know, sort of solutions. We have an investee company based out of Sweden called Bima. It is actually the largest microinsurance company in the world, and it, you know, focuses on Nepal, on Bangladesh, Sri Lanka, Cambodia as some of its core markets, really kind of bringing the segment that's currently underserved right now into the insurance domain. So market by market, we're trying to attack this. But I think, you know, again, just to repeat, right, it is our mission that we want to sort of digitally include those. We have, you know, made a commitment to our board that even if we do dish out these kind of lending, the lending products will not be, you know, the interest rates that we will charge will not be in the same light as, if you like, some of the payday lenders that are out there that's charging effectively 200% APRs, right? Which is ridiculous for some of these some of these underserved segments. Hope that answers your question.
Okay. One more question or comment? Yes, sir. Yes, there.
Okay. Good afternoon. I'm from.
Introduce yourself, please, sir.
Fernando Silvosa from Central Bank of the Philippines, and we've been well part of our interests is into remittances, and we've been coordinating closely with MTBs. Now, I just like to look into get your views with respect to your way forward plans as to whether MTBs would go into partnering with retailers, goods retailers. Just to give you an example, we welcome essentially all the developments taking place within the MTBs, right? Technologies are coming in, but the thing here is that beneficiaries are kind of hesitant in, or remitters, Filipino remitters, overseas Filipino workers are a bit, have some reservation with respect to fintech and all this new developments or technologies embracing MTBs. Why? Because from the neighborhood, from where they belong, they couldn't convert this e-money or money or cyber money or digital money, which is stored in their e-wallet, because much of the retailers are not really into it. I mean, they don't have the facility to convert that into cash. Second, many of the retailers do not have the facility actually to effect any sort of transaction. Beneficiaries have to travel so many kilometers just to convert them into cash and then go back to their village to, effect such whatever transaction they would want for goods, for their day-to-day expenses. My understanding is there's one way back 7 years ago. There's an independent MTB who went beyond remittance. What they did was they sort of came up with a retail store, grocery, in a village, in a village that doesn't have internet, whose cell phones are analog signal and not smart. And so they're kind of having a hard time actually embracing this new technology. Mondex, this new company, came up with a store where they are able to convert and effect any transaction buying goods in the grocery using this one. But beyond that one, I mean, it's kind of limited. I mean, for other regions or other rural areas, it's still not so much of a...
Well, I just want to add that you just describe how complex it is, because the ecosystem, to create the ecosystem is quite challenging. And if we go back to M-Pesa, as we mentioned, I mean, they were clever enough to create the two things at the same time, the agent and the personal use, and grow together. It's quite a complicated issue to create that ecosystem. I normally tell the money transfer companies, look, create an app and just inform the recipient that he got the remittance, and then he can do the same thing that he's always done, just go to the place and pick it up. Sooner or later, you'll develop the ecosystem. I think that we just try to do things too fast. You being an anthropologist of money, you know that. And it's understandable. Younger people like to do things faster. They think, and as we grow older, we know that just time takes its time. So we do agree that sometimes, those solutions, we need to be patient, because we're talking about humans and we're talking about people. And yes, cultures react differently. The reason why Germans are not so keen about cash is because they don't want their government to know what they're doing with their money. So there's political aspects too. Governments are becoming increasingly control freak. And how we are going to react to that, we don't know. It may be, you know, we would say, I'm not going to start paying anymore. I'm going to start using my cash. I'm going to get my cash so nobody knows what I'm using my money for, you know? So there's other aspects, cultural aspects, that create differentiations in certain markets, you know? So time is up. She's been showing me the time's up. So thank you very much. Thank you, my panelists. And thank you for being here.
Thank you once again to all speakers and the moderator for today. For your information, the next simultaneous panel track session will be held at Forum Level 1 on de-risking in the remittance marketplace, issues and alternatives. The session on promoting savings and investments of remittances, amplifying the impact of remittances beyond household consumptions, will be held at Conference Hall 1 at the ground floor. And for those who are attending innovations and inclusive remittance business models and products that meet the client's needs, please remain in this auditorium. Thank you. Ladies and gentlemen, for this simultaneous panel track session, we'll discuss on innovations and inclusive remittance business models and products that meet the client's needs. To begin the session, let me introduce the moderator for this session, Ms. Wanita Woonward, Principal Consultant, CTD Connecting the Dots, Infocorp Technologies, Singapore University of Social Sciences. And joining us will be three distinguished panelists. The first one, Ms. Sophia Frader, Payment Expert, Mr. Eugene Negro, Vice President of Global Business Development, Mr. Michele Gorso, CEO and Founder, Democrats Insurance. Now I'm pleased to invite all the speakers and moderator to be on stage, and I'll pass the session to the moderator. Please welcome.
Okay, good afternoon to everyone, and welcome to the session. Thank you for choosing this session. Could I hear, I know it's really late in the day, could I hear a good afternoon back from you all, just to make sure that you're not frozen up there in the, in the seats? Good afternoon. All right. Now, I think this really is a very important topic to look at innovation and inclusive remittance models and services that really meet the needs of remittance clients. Okay, and we have a very strong panel to talk about this today. To my left is Gene Nigro. He's the Vice President of Global Business for Remitly, and he has many years of experience working across the globe. He also has in his background experience with remittance companies you may be familiar with, Zoom, Western Union, and he also worked for the US State Department. And then we have Sophia Frater. She's a highly experienced product management and marketing professional with a strong and varied background in the payments industry. And I think, my gosh, you've worked for some very strong companies, starting with Western Union, then MasterCard, Earthport, and now she's with JP Morgan Chase. And then we have Michele, like your mother calls you, right? Okay, Michele Grosso, and he's the CEO and founder of Democrats Insurance with its headquarters in the UAE. Yes? Okay. So what we're going to look at today in this session is really what is driving innovation in the private sector, okay? And how can the remittance industry enable clients, okay, with products and services that meet their needs? And for the remittance companies, how can they offer products that are innovative, scalable, sustainable, and profitable? Okay, so with that, to kick things off, I think I'm going to ask Sophia first. Which areas do you see innovation in the remittance industry that is most impactful for senders and receivers and scalable for remittance companies?
Sure. Well, first of all, I would say that the remittance market as a whole changed significantly lately. Before, it was just a business of money transfer organizations. Now, there are so many other companies that entered that franchise, including the cards networks, obviously fintechs, but also retailers, online or offline, also processors of the payments, or actual banks, which been there for a while, but now it's kind of taking different role. So it's definitely changing. In addition to this, money transfers by itself, in many cases, becoming kind of an old product, so to say. And companies are looking at innovation in terms of offering additional financial services attached to money transfers. Such services as, for example, budget management tools, or the deposit accounts or savings accounts, also cards, prepaid cards, micro-lending, insurance, and etc., which I think in general definitely benefits the financial inclusion and making those people who don't have traditional bank accounts are more relevant to the financial world. In terms of true, so to say, new trends or innovation in the market, today was a lot said about blockchain and distributed ledger technology. Definitely it is happening, and I think the good thing about this trend is I believe this technology will help us to save cost on operations in the remittance space, specifically when it comes to relationship to settlement, FX management, float, and etc. Cryptocurrency I would probably look at as a separate topic, but it's also taking place in the parallel. Artificial intelligence is a very big trend currently, and I also believe it's an incredibly important tool in cost savings, not only for the payments processing, but also for compliance optimization, because compliance is probably the biggest cost of remittances today. And with artificial intelligence, which not only collects data, but analyzes and makes decisions, those compliance could be much better optimized, performed in real time, which is very important now. And as it evolves and becomes more sophisticated, I think it definitely will save costs of operations for remittance companies. Now, another clear trend is the physical biometrics or behavioral biometrics, which help to identify and do proper KYC on remittance customers. It also provides for better security and reliability of remittance flows. So that type of industry trend, I think, will definitely will grow fast and will bring incremental benefit to the remittance companies, which will again reflect in the cost savings, and to the actual customers, because it will be more reliable, safe, and secure from their standpoint. Real-time payments, want to mention real-time payments. As you know, there are a lot of initiatives right now happening. Over 20 markets globally currently have real-time payments domestically, right? So a lot of countries are now adding those capabilities in certain parts of the world. Specifically, US is now rolling out real-time payments. And while it is first rolled out domestically, but the next step is always to connect it to the international systems. And obviously with international system connection, it allows for real-time delivery of those payments to the end customer, which is an incredible benefit for the actual consumers, but it is also a benefit for the money transfer organization or business participants who have much less risks associated with real-time payments. Multi-channel offering, of course, I think we all know now payout of remittances happening not only in cash, but also there is a definite growth of mobile wallets, e-wallets, payout to the cards, bank accounts, ATM, and even to crypto in some cases, in some use cases, which is obviously limited, but it's still happening. So I would say those are the key trends, and many of them would benefit the market participants.
Yes. Thank you for that wonderful summary. When people ask me why I get so excited about being in the payments and remittances industry, especially right now, we really are in changing times. We have so many tools now that we didn't have a few years ago to really provide better services. So Jean, I'm going to ask you, first of all, tell us just a little bit about Remitly and how you all view innovation.
Okay, Remitly is a worldwide based online money transfer company. What we do is that similar to other good companies that are here that I'm not going to mention them. But the difference between us and other companies is that we have, from an outbound perspective, we not only service the US, but we service the top worldwide countries, outbound countries worldwide. Meaning that we service Australia, we service the US, we service Canada and the European Union. What drives innovation? Before I start talking, I have to tell you a little disclaimer. I'm going to give you, so I can be honestly blunt, I'm going to give you my personal opinions. I'm not speaking on behalf of Remitly. I work for Remitly. I think that what drives innovations is very simple, and no one wants to address that, is profits. It's plain profits. I'm going to give you an example, or to tell you a little story. I used to work for Western Union for 10 years. Western Union is a very good company. I met the former CEO of Zoom at a conference in Washington, D.C. at the World Bank. When I met him 20 years ago, he was talking about doing online money transfer companies. I went back to we had a lunch conversation, but we don't have time to give you into all the details. I went back to the office, I wrote a memo to my boss at Western Union, and the response was, Jean, you are out of your mind. No one is going to be sending money online. So why is Western Union now doing online business? Because they have been forced, because if they want to have profits, they have to compete. If you look at the earnings release, I don't know if anyone here listened to the earnings release of Hickman, the CEO of Western Union, or the CEO of MoneyGram, and you look at the numbers, at the pure numbers, the data. We have been talking a lot about data. The revenues of WesternUnion.com, they are much, much larger, about 700 million US, 650, 700 million USD. And the revenues of all the other online companies together is not even $500 million. So what drives innovation from my perspective is that companies need to have profits. We can talk about making things better for the consumer, and that's true. But the bottom line is that from a business perspective, we have to look at the P&L. We have to offer products that the consumer wants, and also we have to offer products where we make money.
Okay, thank you. Now, one of the areas that I'm very excited about in terms of financial inclusion and looking at remittances is the area of micro-insurance. So I was very excited to hear Michele was going to be on the panel. And so could you tell us a little bit about the journey that Democrats has had in terms of providing life insurance to low-income migrant workers in the UAE?
Yes, absolutely. I'm really happy to be here. Really excited to have heard throughout the day that microinsurance has been a hot topic with Mohd from Axiata, with Sofia. So I will try to warm you up with this topic. If I don't manage to, I hope you do so with my Italian accent a little bit. So we believe that innovation can be effective only when it actually goes and benefits the end consumer. And I think that we can all agree that the migrant workers is unprotected from the risks that she faces in the host country. And because her family back home is dependent on that remittance flow, she's also exposed to them. And that makes that migrant workers the perfect ideal customer for insurance. Now, surprise, surprise, she doesn't have access to it. Actually, 97% of the people in these lower income communities, they do not have access to insurance. If we look at the markets where we are from, the Middle East and North Africa, lower income communities, less than 1% of it have actually access to microinsurance. And that's what we focus on at Democrats. We make insurance affordable and accessible to the lower income population via their mobile phones. And we work with large companies that have these mass consumers among their customer base. So, for example, mobile operators and remittance houses. We started working actually with the remittance houses thanks to actually GFRID with their financing facility for remittances, and in partnership with ADA Microfinance, an NGO based in Luxembourg that specialized on inclusive finance. And the project aims actually to provide insurance to the lower income Indian and also Filipino migrant workers in the UAE, and also to their families back home via the remittance house channel, and through a fully digital customer journey that is enabled by Democrats technology. The project is actually innovative with many aspects. The end-to-end processes, they are fully digital and automated via our machine learning enabled insurance technology platform. And the migrant workers, most importantly, only needs her phone to purchase and service and claim for her insurance policy. Another example, we educate the migrant workers on why insurance is important for them with a financial education campaign directly delivered on their phone. And each month, we inform the beneficiaries of those policies of how they can claim with a few taps on their phone, with mobile communications delivered in local languages. And so we are now, we're launching this pilot in the UAE on these UAE to India and UAE to Philippines corridors, and we plan, of course, to leverage the learnings to expand it to other corridors very soon.
Thank you. Now, when you started looking at this initiative, you did quite, you reached out to the community, you had focus groups, you had questionnaires to really gather data to understand what the needs were of the clients. And so that actually leads into my next question, which is, how many of you have heard of the concept of human-centered design? Human-centered design? Okay. Very small number of you, okay? Now, this is considered a real innovation tool today, especially with the development world, and it's a way to ensure that you understand the client, the environment they're working in, and what they need, so that when you launch the product, you have launched the right product. Now, we had a bit of a discussion about this term called human-centered design, and is it just really a relabeled, a new name for what hopefully good product developers have been doing for a long time? So I wanted to throw that question out to Sophia and to Jean about human-centered design, and is it something new, or is it something that good companies have been doing all along?
Thank you. First of all, sorry, I forgot to do it earlier, but I do need to say a disclaimer. Jean reminded it to me that everything that I'm sharing today, the information and the opinion, it's my personal opinion, does not represent official opinion or view of JP Morgan Chase. Thank you. Now about human-centered design. We've had a discussion just before that, and I actually expressed my opinion that I don't believe that it's anything new. I think it's just a new name for something that existed for many, many years. At least when I joined workforce about 20 years ago, that already existed, and I did that when I joined. And what is really human-centered design is when you're creating a product with the by collecting feedback from your target audience, by creating the product that will fit your target audience, meet their needs, will be usable and easily understood by your audience. And also in the process of development, you have testing, focus groups, different type of research with your customers to make sure that what you're creating is actually on track with that. So if I looked at some of the books 20, 30 years old, it usually was called customer-centric design or proper market research and customer analysis and in the process of development. Customer obsession is some of the books, and etc. And frankly speaking, I think that any good product should be developed exactly this way. I do recognize that potentially some industries implemented it earlier or been doing it forever, almost since the products exist, and maybe some other industries kind of were a little bit distant potentially from the customer. Maybe technology was a little bit more distant than consumer packaged goods, for example. But I do believe it's absolutely right approach, no doubt. And if company focused on this more than before, it's great, absolutely great and welcome. Yeah.
I think to some degree we concluded whatever we call it, whether it's customer-centric design or human-centered design, it's very important to understand the customer as you are making the design, especially as we have the new technology, whether it be feature phone, now we're moving into smartphone, there's a learning curve. Did you want to make any comments about what you did at the very beginning?
Look, just maybe more in general on how these, large corporates, especially insurers, and actually I can take the blame here, although Democrats were not actually insurer, but we are in the space. I think that insurers had this tendency to build product, just based on actually Excel on models in their offices, and not doing a lot of research before that. And that's one of the reasons why 97% of the people do not have access to insurance. So yes, this is absolutely needed. Yes, it is not a new concept, but several industries, including insurance, have lagged them behind
I want to add to what Michelle just said, is that the challenge is, even though companies want to do it, but they do want to spend less money and get to the market sooner. And that's where the problem happens. Because they're saying, well, yes, we all want to do human-centered design, customer-focused design, but we want to spend as much little for research, that little for testing, and we want to be to the market as fast as we can. So that's the challenge. And because of that, I also see a lot of companies, what they do, instead of doing all this proper research and testing up front, they actually launching with a minimum viable product, so to say, and then they learn what's happening with the market, how market takes it, and then those learnings in the new iteration, they apply it to the optimization of the product. Sometimes it works fine, but sometimes they spend already so much money in the beginning that it's kind of a loss, when they start to redoing it.
I think you may have had some comments on this topic.
Well, yes, I have, once again, a different point of view. I think that human-centric design is not a new concept, but the problem that I have with the concept is that it's mostly done by, and there's no criticism of anyone, it's done by intellectuals, it's done by university professors, that they're in an ivory tower. You can name any university. They don't go out into the street, they don't speak the language of the countries. They're recommending products for what? Ethiopia, Bangladesh, Argentina, Brazil, Vietnam, And they have not even been there. They not even speak the language of the country. So then they create products, and more important, they don't look at the P&L. Once again, we are here in the business of, making money. We have to create products that our customers want and that also the product is profitable. What does our customer want? They want the money fast. They want speed. They want instant service. If you look at all the other companies across the spectrum from A to C, what do they advertise? Instant service, immediate service, in seconds. If you take away all the legal disclaimers. And the other problem is that it's very difficult to develop one product that it can be used across different cultures, across different political systems. They have different type of controls. So the concept is very good to me. Probably I'm wrong, but you need to go out and test it, and you need to make sure that it works all over the world. You cannot have multiple products. There are like 72 countries, I think, in Africa. You cannot have. There is no way how you can have 72 different products. Then you have, many languages. The key for me is that, once again, that to develop a product, you need to go out on the street, you have to walk the neighborhoods, and the product has to be profitable. Because if not, I was at Western Union, we launched a lot of new products that we thought that was going to change the world. We tested. Where would we test the product? In the US. Did we travel overseas to test the product? No. Maybe that has changed. This is, 10 years ago. So in a nutshell, the product has to be profitable. It can sound nice in the ivory tower of a university, but in the real world it might not work.
Okay, so I think we concluded how important it is to test first in the market and to make sure that the product over time will be a sustainable, profitable product. Now, I want to move on to another topic that's been talked about a few times today, which is mobile wallets. And looking at this from a financial inclusion side, the World Bank, as you may all be aware, released their Findex report a couple of weeks ago. 69% of adults now globally have an account. And where we see mobile wallets most significantly as a region is in Africa, about 10%. In fact, some of the countries exceed 10%. The people have mobile wallets. Now, looking at specific countries, we have other countries like Bangladesh, Iran, Mongolia, and Paraguay who actually have more than 20% of the population with mobile wallets. So the question is, how do you view going forward the growth in mobile wallets, which is expected in this region, to benefit senders and receivers of remittances?
Well, I have mixed feelings about mobile wallets. Just to give you another story, I was in the Ivory Coast about 7-8 months ago, and we were traveling between two cities. The car broke down in the middle of nowhere. We have to walk about, I don't know, 2 or 3 kilometers to get to a village in order to fix the car. When we got to the village, mobile wallet was all over the place. All over the place, you can see mobile wallets. When I asked them if they receive remittances, some people say yes, some people say no. But I was talking, Sophia and I had lunch, about an hour ago with a professor that she was asking some questions from Australia. And after talking to her, it really opened my mind. What mobile wallets are doing is that they're making cash available easier. People in most countries, the funds come into a mobile wallet, and what happened? They cash out immediately. So my perspective is that mobile wallets are probably going to help to keep the status quo. They're going to make cash available anywhere. Because if you go in most countries, developing countries, I'm not talking about the European countries, Australia, New Zealand, and the US and Canada, and so forth. People want cash. Like someone else gave the example of their son, the panel that was here before. My son might get upset with him because he never goes out with cash. But he lives in the US. If you go to other countries, developing countries, you need cash. And I think that for years to come, cash will continue to be the king.
I want to add to, first of all, I agree with Jean, and I want to add that we live in a wonderful time when there are so many different technologies coexist. There is cash, there is still checks in some markets, right? And other markets never seen checks. There are markets with cards, some markets never seen cards. So it's a very interesting time. And there are some markets which are absolutely dominant with the mobile wallets, where in those markets they are absolutely necessary. And I think the share in general of mobile wallets will grow, but it will take time, learning curve, et cetera, and et cetera. There are many conditions for this to truly roll out broadly. Add to Jean's points that mobile wallets do bring cash availability in different markets, even in those rural areas where there is no branches or money transfer organization or the bank or ATM. That's number one point. Another point, which we actually also discussed during the lunch, is that it also brings financial inclusions to women, to the population, which normally does not hold money or not kind of given those money to hold them or to take care of budget of the family. And very often they have to ask their husbands to, share money or to spend them according to the family needs. So in this case with mobile wallets, they actually receive on their own mobile device, and they can spend it in a way they think it's important for the family or potentially for their own needs, which I think is a great tool for financial inclusion of this part of population, which otherwise lives often kind of in trouble and asking for money. So I think that's an important point to make. In addition to this, general rollout of mobile wallets will depend on acceptance. Like, for example, when cards were launched, and I work for MasterCard, the main idea was to really reach that acceptance level, acceptance at retail, in regular places, that everybody will start using it, right? And it takes time for that acceptance to roll out. And the mobile wallets, they're facing the same challenge today. Some retailers or some businesses, they accept mobile wallets, but as a payment method, but it's very limited. That's why Jean mentioned that they often receive money and kind of cash it out, like ATM. They use a mobile wallet as ATM, right? But but when it's used as ATM, there is another problem, that you have to pay an ATM fee, which you also often pay a fee for cash out from the mobile wallet. Nobody really likes it. Now, when you will be able to pay with mobile wallet for whatever you need, and in those countries, that will obviously increase the usage and penetration of mobile wallets drastically.
Previous to this panel, we had quite animated conversations about mobile wallet. I am a big fan of mobile wallet, but it does, the ecosystem of where people are living, it needs to be accepted in order to really make it a more viable proposition. The other thing that we haven't really mentioned today, and just to say this, we're seeing the trend, especially here in Asia. I feel like we're at a tipping point where we still have mainly feature phones in many of the markets, and we're moving because of the reduction of cost. We will be seeing more of smartphones, hopefully maybe even 50% in many of the markets out here, many of the emerging markets. And I think what people will be able to do with smartphones will be quite dynamic. So. Now, I actually live in Singapore, and we have something called fast payments. I am so excited about this. I can send money to anyone 24/7, and it is received in their bank account in less than a minute. Now, there are, I think, Sophia, you said there are about 21 countries now that have fast payment systems, and so, I think we decided this is an area that will quite significantly help and build stronger business models. So I throw that out to you to comment on.
Well, definitely. Well said. I mean, it's extremely important and helps real-time, fast delivery to the bank accounts. And the bank accounts are still widely used, depending on countries, of course. In some countries, they're more used, in others less used. And some countries, they're less used because the delivery of funds takes from 2 to 3 days to 1 week, or sometimes, in some cases, even longer, with the research of where money are, with all the corresponding banking model, where you don't know where your money is stuck. Now, with the new technology in space, that would be a combination of domestic faster payments and cross-border payments providers, including different types of fintech that connect those faster payments globally, right, on the global scheme. That will allow for real-time delivery from the starting point to the end point. But obviously, for this to happen, there should be both, both steps in that chain be real time for cross-border movement and real time domestically. Today, there are many fintechs actually that do real-time payment from one country to another, but why the money are not delivered in real time at the very end point in terms of the end account is because in some countries there is still no real-time payments domestically. So I think that's definitely a trend that's globally happening. And right now, US is rolling out this, which is a very big market as well, for send out or for receiving, also big market. So, and I think this trend will continue expanding globally. So eventually, most of banking systems will be in real time, and that will allow for true real time end-to-end. In addition, with combination of this new technology and distributed ledger, that will actually allow for not only real-time messaging, but also real-time settlement, which will increase the efficiency of the whole system drastically and reduce the cost.
And just to add on that, I think it's actually it's quite of a similar to the mobile wallet. So you need infrastructure, you need scale, you need interoperability. So before before you can start discussing adding new services like remittances, like insurance to a wallet, you really need you need people using it. And the truth is that up to now, yes, the case study of like M-Pesa in East Africa, also in West Africa, it has been good, but it actually hasn't been replicated yet. So you can put insurance on one wallet, but then will you have people actually using it? That's the main question.
And Jean, do you have any comments on it?
Sophia covered everything.
Okay. Okay. Now I wanted to throw out card companies, because some of the models that we're seeing in remittances are based on prepaid card. So Sophia, I'll start with you. You may have an opinion.
Actually, I would say there are different types of engagement on the card side. One is when the money paid out to prepaid card. That's just one model which existed for quite a while, and it's still kind of growing in terms of penetration of that model. But there is also a model when you actually send money from the card, using the card, and delivering money to the card, using the card number. So, and those kind of systems, they're provided by the card networks such as MasterCard or Visa. Visa called it Visa Direct, MasterCard called it MasterCard Send. But the real ability is to send money to the card or underlying account, so to say. The good thing about that model, that it's very fast. The downside, obviously, is still the banking channel, and it's still not 100% global. So it's growing in terms of penetration, but today it's not global, meaning it's not like you can send from any country to any country on the card, because it's depending on technology, on the card's enablement, on the banks which issuing those cards. They need to do certain work on their side. But in general, I would say it's quite convenient way of delivering to the cards, whether it is prepaid card or actual debit or other card which is attached to your account. And in my previous role when I was at MasterCard, we did some research on this in certain countries, and what we found out, there is quite a big, broad population that prefers to receive to the cards. But what's funny in that research, though, is that the primary, preference of receiving to the card was not related to the fact that they can use card everywhere or want to use card. Not at all. It was funny. And I'm talking about not the European market. I'm talking about Asia and Middle East and kind of Africa also. So in those markets, they prefer to receive to the card because they consider it safe, secure, easy to receive. But then they still often go and cash out in those markets.
Okay, but at least they didn't have they wouldn't have had a problem using it to purchase many goods. Yes?
Yes, they wouldn't have a problem, yes, of course. But still, it's kind of interesting because instead of saying, I really prefer to use cards everywhere, they want to cash out. But I think it's truly also related to financial inclusions because it's kind of teaching customers on what to do with the cards, how to use cards, how potentially manage your budget on the card, maybe even keep like some saving type of funds on the card. So it's really a good way to step into the financial world.
Did you have any comments on card?
Yes, 2 points. One is that I believe that the industry can do deposit to cards as long as it's a card that is issued by a bank for compliance reasons. Because there are many companies that they issue cards, you know, I'm not going to name them. They're prepaid cards that we usually don't know who owns the prepaid card. I think that's a good for the industry. We can reload cards that they're issued by the banks. It's like a deposit to an account. The challenge that we have is that we have been talking here, some people were talking here this morning about the fees and the FX that the remittance companies charge. It's very nice to say that, but it's very complex to run a business. We have the fees that we have to pay to the payers. We have the fees that we have to pay to the banks, and all the operational expenses. Having said that, the challenge that we have is that the cards, and you know, we're talking about this over lunch, and there are different points of views, is that when I have met with some companies that with which you can do deposit to cards, the challenge is that the spread that they want to charge on the FX, we're talking about 200 to 300 bips. And that's not profitable. It's not profitable for anyone. Well, it will be profitable if someone, you know, pay for a service, you know, $10, $15 for a $300 transaction. But that's not going to happen. So the issue is that the companies like, you know, Visa and MasterCard, they have to offer the service and they can get into this business as long as they offer a very competitive FX rate. The issue is that the FX that the companies charge in different countries can be anywhere from the US that's very competitive above, you know, 3–4% a year, versus you go to other countries where they charge up to 60% a year. So how can you offer a service that's competitive? It's next to impossible. You have to offer a service, deposit to cards, as long as the fees and the FX that the paying partner is offering are very, very competitive.
Yes, I agree with Jean, and I think there are different models depending on how the flow goes and what type of cards you deposit and at which moment the deposit actually happens. There could be better or worse FX rate, so it's really different. Just one point to add is that what's interesting, the card network companies such as MasterCard, for example, not only looking at the card channel for remittances, but they're also looking at multi-channel solutions, which they basically compete with many other players. The product MasterCard Send, for example, they are delivering to bank accounts, cash payout, e-wallet, mobile wallet, and cards. So in general, it's interesting just to kind of see how the market trends changing in terms of everybody now wants to do everything, kind of, if I can say that.
Yes. So the good news again is I think that we are at a time where we have many different tools, companies have many different tools at their disposal to bring to market a good product for the remittance clients. Now, if you can remember back to this morning when the Global Compact for Migration was mentioned, just to remind you, it's the apparently first intergovernmentally negotiated agreement prepared under the auspices of the UN, and it covers all dimensions of international migration in a holistic and comprehensive manner. Now, what's very important here is there were two objectives, being 19 and 20, that have to do with remittances and migrant workers. And before we came together, we read through those objectives, and under Objective 20, we wanted, as a panel, to comment that we felt there could be an addition to that. And I'll let Michele take that point, because it's really in your area.
So I will take my very comfortable insurance chair and advocate for that. We believe that this objective 20 should include microinsurance under their paragraph 20 in India. And it's really for the same reasons that we discussed before. I mean, the migrant workers, they are the ones that need insurance and that need protection the most. If you look back at when actually the insurance industry was born, 150 years ago approximately, we could argue that in those 150 years not much have changed, but still insurance, it was born as a way to provide mutual aid to those in need. I mean, who more than than the typical migrant workers who often lack access to any other social protection tools, who often lack access to good quality healthcare that insurance could provide.
Okay, so for those of you who are not so familiar with the objective 20, I just wanted to take a moment to read. It's actually 20I, which is, it reads, provide access to and develop banking solutions and financial instruments for migrants, including low-income households, such as bank accounts that permit direct deposits by employers, savings accounts, loans, and credits in cooperation with the banking sector. So if we really look at the financial inclusion model, for us when we were reading through, it was missing the insurance, which we all agree is a real benefit for the migrant workers and can be linked to remittances. So on that note, we only have, I think, about 15 minutes of time, and I wanted, we have a panel here with incredible experience. I wanted to open up to the audience to see if you had any questions for the panel. Okay, the gentleman, if you can state your name and company. Okay, technology is good when it works.
There we go. My name is John Scarfano. I'm in charge of new initiatives at Remitly. So I work with Gene, which you can imagine is lively, to say the least. My real question is actually for Sophia, though, because I think, just a point of clarification, you said something that seemed different than what everybody else here has said so far today. And what it sounded like you said about the prepaid debit card, or the receiving the payment on a debit card or remittance, you decoupled that from its acceptance at merchants. And so far what I've heard from everybody else has said is nobody's going to take a wallet or a debit card or anything else unless there's ways to spend that money on at a merchant. It's just not sticky. Did I hear you correctly in saying that your research said the opposite?
Yes, you heard this correctly, but just to mention, that research was done in specific markets, so it wasn't in every single country in the world. But specifically, I was referring to that point came out in the research in Philippines, where the people from kind of rural areas, they said that they would like to receive money to the card. And I said, what you will do with this afterwards? Majority of them said that they will cash it out. And I said, then why do you need to receive to the card? They said, well, because they feel, first of all, safe that the money on the account, and they may not cash out everything. They can keep half of it or part of it on the account. And secondary, they have a perception that when they go to the money transfer operator location, that it's unsafe. They feel very unsafe that somebody can watch them and can follow them and etc. And they feel much more safe with the ATMs, because ATMs, normally they take out like a small amount and it is in different places and inside of the stores and etc. So they felt kind of more comfortable with this. Yeah.
And was that just survey data, or did you actually see that in the wild? People were choosing to take it on cards and then were using those cards in the exact way you mentioned?
That was specifically the survey results,
okay.
But after that, we actually, I was working on launching that service. Yeah.
Thank you.
Okay, there's a question in the back.
Hello, good afternoon. I'm Kahing from Bank Negara Malaysia. Yeah, I have a question for to the panel. If you look at it these days, countries are beginning to research and then to move from fiat currency into digital fiat currency. I would like the panel to share their remarks on the opportunities and innovation when we start heading that way, digital fiat currency. Thank you.
One comment on that, and just looking at the lower income population. So it's quite similar to what we said before as well, right? So the starting point. So as of today, let's take insurance again. 97% of people in our emerging markets do not have access to insurance. So you can facilitate that access by getting closer to the customers, with remittance houses, with mobile operators. But would it really make a difference to offer to low-income communities the possibility of paying insurance using Bitcoin? Maybe not. So for these segments, we don't think it would increase the access to insurance required.
Well, I would see the benefit, actually right now I think the growth of cryptocurrencies is quite related to the fact that they are not regulated the same way as the regular currencies. But I think it will change with the future, and a lot of countries and regulators right now are looking into that. And as soon as it will be regulated as any other currency, I don't see, personally, I don't see a lot of benefits in it. And especially keep in mind that they've been traded as well, so the actual rate, FX rate of those currencies against any other currency is changing constantly, which means then there is an FX risk as well as with any other currency in the world.
Excuse me, sorry. I'm not referring to fiat, to cryptocurrencies. I'm referring to digitalization of fiat currencies.
Oh, well, isn't it already happening with all the digital channels, right?
It's different from e-money, actually. You look at China, for instance, Dubai, for instance, where they are researching to move their fiat currency into cryptocurrencies issued by the central banks.
Oh yeah, I know, there is a similar move actually in some other markets, like in Russia, for example, they're looking into that as well. But I think there is not enough of usage of this right now. It's all the new initiatives, and actually interesting how it will work. But it seems like those currencies will be operated and used in a very, very similar way with regular currencies of that specific country. Yeah, but I'm not sure how this will coexist in the future. I'm not sure.
Do you have any comments? No. Okay. Do we have any other questions for the panel? Yes?
Hello. Hello, I'm Dilli from Nepal Rashtra Bank. My query is...
Can you get closer to the mic?
Okay. Related to the innovation and also in reduction of cost. Actually, some of the governments now, they are providing subsidy to the money transfer operators, or in any way that subsidy is going to the migrant immigrants, especially to reduce the cost of sending money back home. So, but if you talk from the another side, if you see from the another side, that subsidy may hinder to the competitiveness and also innovations. So I would like to request the distinguished speakers whether government subsidies should be provided to the money transfer operators or to the clients so as to reduce the cost. Thank you.
No, because this is a business. Why should we get him subsidies? You know, you sink or swim. Not at all. That's my point of view. Because it sounds good, you know, if you want to do it for political reasons, that's fine, but then when you go and try to compete in the international markets, it's going to be very difficult. It's like when you look at the, you know, the presentation this morning by the CEO of AirAsia. He runs a business, and he's able to survive. You look at different airlines from different countries, like Alitalia, for example. The government has been subsidizing Alitalia for years. No. No, you know, you sink or swim. No, that's my point of view.
I just want to add to Jean's point that it's not only subsidies, there are also other instruments that are actually kind of messing up with the true competitive market, including taxation. A lot of larger corporations, they're taxed significantly less than any small company. Like moms and pop stores, for example. They may pay 30% of their profit, large corporation 5%, and it's most of cases. And to his point, I actually think it creates unfair competitive environment and unhealthy market. So if you were to kind of give subsidy, you're supposed to give basically to everybody, and if you do the tax benefits, that should be also distributed kind of equally or in the same way.
Yeah. Just one comment on that. I have a different view, so I agree on the fact that the subsidies should not go to, you know, to finance the core operations, because yes, it is a business. If a subsidy would go to finance one new thing that actually it doesn't happen until now, and that a new thing, it could be any, you know, new business model, new technology, any new innovation. If that if that subsidy goes to finance the research, the development of that, it makes sense, but not the ongoing operations.
Okay, so we've been given the 5-minute time. I had asked each of the panelists to, at the end, present their one idea or one comment they would like to leave you with for this panel. So, Jean, over to you.
Well, I'm going to make a comment that isn't politically correct. But I think that the UN needs to stop passing resolutions that they cannot enforce and do something to protect immigrants. And we, all of us as an industry, we need to protect our customers. We need to take a position. We talk, and talk. Yeah, we support the rights of the immigrants. What do we do? And I'm talking about all remittance companies. Nothing. Nothing at all. What does the UN do? They pass all these resolutions that no one enforces. We need to change the way how we behave. Because after all, we are dealing with human beings. That would be a real innovation, to stop talking and doing something.
Okay, innovation with impact. Okay, thank you, Jean. Sophia.
I will do not political comment. That's enough. Good one. So I would say innovation happens when the new technology, old problem, and great idea meets all together. And I think we still have a lot of old problems, and we do have quite a lot of new technologies now. And it looks like there are many people with some great ideas today. So, and I would vote for all of that to meet each other as frequently as possible. And this will help to speed up innovation. And as innovation speeds up, it actually makes a next step to innovation even faster. So that's my comment.
Thank you. Okay, Michele.
And I will leave you with a comment that hopefully will make you think that what we're doing and how insurance is actually important for the migrants. So the average migrant workers in the UAE sends approximately $280 per month back home, which goes equally to fund investments and like consumption. So let's take $10 out of this 280. What do you think it would be more effective in the longer run? If those $10 are used for consumption, or if they're used to pay the insurance premium of the life policy for the migrant, or the health insurance of the families back home?
Okay, thank you. So thank you for joining us for this session today. I think we have a networking break just after this, but I think we had some good discussions looking at new players coming into the market, the new tools that we can use, and the emphasis at the end in terms of private sector, public sector really working together and making sure that we create positive impact for our remittance clients. So thank you for joining.
Thank you to all speakers and moderator. We'll now break for afternoon coffee and tea. Refreshment will be served outside the auditorium for 15 minutes. Please be at the auditorium for the wrap-up session at 5 p.m. Thank you. Ladies and gentlemen, we have come to the end of the session for today. So how's everybody's feeling? Great, yes. Our speakers for today's session have covered many important areas in relation to remittances and strategies to amplify the development benefits. To conclude the private sector day, I would like to invite a representative from the three co-organizers to be on stage to wrap up the discussion. Please welcome. First, I would like to invite Mr. Nik Muhammaddin Nik Musa, Director from Bank Negara Malaysia, to deliver his concluding remarks. Please welcome.
Good afternoon. Thank you very much. Great to see everyone back in this hall. Many are still here. First and foremost, I wish to say welcome back to the plenary session. I've been entrusted to summarize key points that took place in the breakout session, primarily on the market panel A1, 1A and 2A. I must say that the session has been rather exciting, so I hope that I could do a little bit of justice in sharing some of the key points that was taken down. On the first market stream, 1A, I think some of the key messages that was discussed. Number one is, I think the public and private sector should think more out of the box. I think we've heard that being mentioned in the opening session by the key speakers. For the industry to be more competitive, more convenient, safe, as well as more inclusive. And in relation to this, the advent of innovation and technologies have great potential, as we have heard over and over again today, and have indeed been proven to make remittance services even more competitive, safe, and convenient to the consumers, as well as to the migrants. In one of the sessions, it was generally agreed that technology is a way forward for remittance companies to remain competitive in the market and ensure customers' demand for safe, inclusive, and convenient remittance service is well and duly fulfilled. Technology should be used as a backbone in providing remittance services, regardless if it's a fintech or a non-fintech companies. That was one of the points that was highlighted. In the journey towards greater digitalization of remittance services, it was also highlighted that adoption of digital remittance will still be challenging, given the awareness and literacy level of customers and migrants on digital channels. Well, nonetheless, with education, initiative, perseverance, and the right incentives to the customers, I think the rate of adoption will certainly be accelerated. While technology will be the key factor moving forward, I think the traditional remittance through over-the-counters and agent will still be an important role in at least the next 5 years. This is given that cash, as was reiterated, is still king, with a significant number of migrants still preferring to use hard currency, hard cash in conducting remittance. So I think the industry has some way to go before we increase the level of e-remittance from what it is today at about I think about 4 or 5% to a more encouraging level. And another model Another emerging model is providing comprehensive solution for remittance that is tied with other services. I think this model allows remittance operators to build trust in the customer as a reliable and trustable market player by engaging with the consumers with everyday services. I think some of the examples that were mooted include to tie the everyday services from the migrants' local news and music to their favorite food and how they can order their food. This is all to tie in with the solution for remittance, as well as the more serious financial services that can be tied to remittance, such as micro insurance and micro savings services.
that was raised during the discussions is know your diaspora. Diaspora is not an homogeneous group of people. There is diaspora in diaspora, and the migrant investors profile is definitely a very much needed instrument. Data, we know, are slowly improving, but we don't have enough information on where migrants come from, where they want to invest, where they are residing, their status in the countries of destination, and finally also the impact that they want to achieve. But also the impact that we want to achieve as facilitators of those investments. It will be great to harmonize the methodology of collection of data for the creation of a comprehensive migration profile in that sense. Data is key not only for the statistical institutions of the various governments, of course. They are very critical also and especially for the private sector, for all actors and companies who want to enter in the market of investment, provide for good business products and propositions. As it is for remittances, migration corridors approaches have to be tackled also for investment purposes. We always have to remember that we are going to work on both sides of the corridor. We are working on host communities and also in the countries of origin. In that respect, we listen to many examples of different mechanisms. Private sector companies and international institutions shared best practices and products that they are making available currently in the various markets in Asia Pacific, but they made also some references to other regions like Latin America and Africa in particular. Some good examples of diaspora bonds, seed capital matching funds, crowdfunding platforms, varying from the type of diaspora they are trying to address and also the impact that they want to achieve have been shared during the day. Another issue that has been prominent in the discussions was the lack of marketing and awareness campaigns. And it was mentioned by several panelists as an issue to be addressed. Migrants need to be very aware of the various options that they have if they want to invest in their countries of origin. We always have to keep in mind that they are investing their own money. We had an example of diaspora bonds, for instance, in Nepal that didn't work because of the fact that it was too sophisticated, probably, but also because there was a clear lack of marketing. The last point, but not the least, is partnership, the importance of partnership. Partnerships between private, public, and civil societies are mutual beneficial and crucial for different reasons. They are important to create technical expertise, but also to cover for weak institutions and improve the complementarity of the different actions. With this, I think we have summarized in brief the discussion that we had during the day. Thank you.
Thank you, Mr. Morrow. Thank you once again to all the representatives for the very comprehensive wrap-up session. For the next session, we'll hand over the RAMTEC Awards 2018 Asia Pacific to the person in charge, Mr. Hugo Cuevas-Moore, Director International Money and Transfer Conferences. Thank you.
So, good afternoon. We're happy we'll be closing the day. So, we're very excited to be here. My name is Hugo Cuevas-Moore. I'm a consultant. I've been in the money transfer industry for a long time, 31 years. And I started the International Money Transfer Conference in 2010 and the RAMTEC Awards last year. Thank you very much, IFAD and World Bank for hosting the RAMTEC Awards. We did it last year at the UN in New York for the first time, and this year, thank you, Bank Negara Malaysia, for also bringing us to do this year. I'm not going to say much because most of the work has been I lost Olivia. So Olivia is backstage. So most of the work has been done in conjunction with Olivia, who is also a consultant, and many people who have helped us to make these awards. And I tell you, we created the REMTech Awards, and if you go to the website, it's remtech.org. It's not an NGO still, but the idea is that it hopefully will be in the future when we are able to keep on doing this and keep on promoting remittance innovation. And the idea is that it's just highlight good projects, good initiatives, good ideas, companies that are doing new things, new thinking, and having an independent judging panel. The idea is for them to judge the awards, and this year we used the blockchain for the first time to vote. So we are very, very happy that we were innovative in using technology. So Olivia, where are you? Okay. So that means 2 seconds I can talk. So if you, yes. Yeah, I better just keep on talking than give you a little dance here. So we produced this this leaflet. It highlights every entrant that was accepted in the awards. So I think it's a good idea for all of you to look at what kind of submissions came out. The judging was done on a different criteria that was selected, but I think it's important is just to see, you know, what entries really came, because there's some interesting, and it gives you an idea of what remittance innovation is all about around the world. There is all types of companies. Some of them traditional companies, some new startups. So it's not only, not what we expected at the beginning. We thought we were going to have only startups or things like that. No, it's a bit of everything, which for us is really, really interesting. We hope to do the REMTech Awards next year and keep on promoting this sense of innovation in the remittance industry. I'm going to, since I need to keep on talking, I was born in. Olivia, the mic is yours.
You are released.
Okay.
Thank you, Hugo. All right. I am co-chair of the REMTech Awards this year. You have probably gotten some emails from me telling you to vote in the Industry Choice Awards. And I thank you for those who participated. The Global Forum is all about, bringing different people from different parts of the remittance industry and learning from each other and finding ways for us to collaborate. So I thought this would be a great way to foster that sort of engagement. I want to thank, first of all, talking about collaboration, this wasn't all on my own at all. I want to thank Hugo for giving me this opportunity. We had, of course, our hosts here with the World Bank, IFAD, and Bank Nagara. There are also our sponsors. We have Spark, Tranglo, and Express Money. Thank you very much. And also, the Malaysian Association of the Money Service Business was really instrumental in being our eyes and ears on the ground here in KL. And of course, our REMTech team back in Guatemala and Miami. Finally, we have a lot of the judges here present. They were actually the guinea pigs for this first blockchain voting application that, if you did read the emails, the industry vote was on blockchain. So again, an opportunity for education. That is actually what I do when I'm not doing RemTech Awards, is consult on blockchain payments. And there's obviously been a lot of buzz about the technology, and I thought this would be a great way for people to learn more about the benefits and how it actually works. So if you did get a chance, that's great. If you didn't, you can actually still go online and look at the Ethereum blockchain to see the whole audit of how the vote counted. It's anonymous, but it's permanently there, and anyone can check it, and it proves that the vote was actually independent. This is actually the second money transfer awards I've done. I did one that was for another company previously, and I know with these sort of awards, sometimes there could be questions about, who influenced it or whatever. And blockchain, ultimately, it's not a miracle for like a silver bullet for anything. Ultimately, blockchain is great for situations when there's conflicts of interest. And it creates a shared ledger that supposedly will be unbiased. So I thought voting was a great use of that, so that you know that it was actually independent, and neither me or Hugo were bought off or anything like that. Not that Hugo would ever do anything of that sort of nature, but now you have technology to also back that up. So I developed the app with my firm, Yokip Consulting, and with Horizon State with their technology. They are a blockchain voting startup. And I would like to introduce the stage Jamie Skella from Horizon State.
Hi there. I'm Jamie Skella, co-founder of Horizon State. Look, I'll keep it relatively brief, but it was an honour and a pleasure to join forces with RemTech. We were able, in a very short amount of time, to deliver their first vote on blockchain, and I'm pleased to announce the winners of the Industry Choice Award, which is Value for their mobile wallet and Remit1 for their Remit1 Compliance Manager. Yes, there are two. It was a tie. So congratulations to both of those innovative companies.
Next, we will have George Harrop from Spark, who will be presenting an award for B2B solutions. The award to SimbaPay Chatbot. If you both could come up to the stage. Please welcome Sudesh Girian, COO of Express Money Service, who will be presenting the Remittance Synergies Award to Airtel Tanzania and Mahindra Conviva for their domestic mobile money interoperability. Please come up to the stage. Next, we will have the Technology Innovation Award. Technology Innovation Award, which is to value for their mobile wallet. Sia, Director and Co-Founder of Tranglo, will be presenting the End User Experience Award. Guess who this one goes to? Let's see. Value for cash in, cash out model. This one, the last one. Next, let's have Leon Isaacs, CEO of Developing Markets Associations Global. He will be presenting the Solution for De-Risking Award mention to Remit One Compliance Manager. Please come to the stage. So the reason, they have an award mention. So one thing, the judges, if they saw a particular entry that they thought was particularly notable, they could give it an award mention. And that meant regardless of what the other judges said, that they would get an award. And also being a chance to be in the industry choice, which they won, so. I'd like to welcome Jonathan Capel, Director of Asia Pacific at Market Associates Global, to the stage. He will be presenting the Underserved Markets Award mentioned to PayKey for the Gateway to Borderless Payments. Finally, I'd like to present the Popularity Award to Transfer2 for earning the most online votes from the public vote. Transfer2, please come to the stage. These last few winners and mentions, unfortunately, were not able to attend, but we still want to recognize them. We have Rewire for winning the Remittance for Social Impact Award, Trulio for Compliance Innovation, Koi Banks for an Originality mention, and Trulio also got a mention for wide-ranging potential. So thank you all for attending, and thank you all to the winners and judges. You all deserve a big hand.
So that concludes our RAMTech Awards. Olivia, you did a great job. It was, I hope we can work together next year to do that again. Thank you for the judges. Thank you so much for your collaboration, your insights, and thank you all for attending, and congratulate the winners. Thank you.
Ladies and gentlemen, that's the end of our session for today, and congratulations again to all the recipients for RAMTech Awards. Once again, let us put our hand together to all the recipients of RAMTech Awards. Yes. Ladies and gentlemen, now we'd like to invite all delegates to attend the forum reception outside the auditorium until 7:15 p.m. For delegates who are taking the bus, kindly assemble at the foyer Sasana Kijang at 7:30 p.m. Just a reminder about our session tomorrow. The interactive workshop session will start at 9 a.m. For those who are staying at Hilton and Lee Meridian Hotel, the shuttle bus to Sasana Kijang will be departing at 8 a.m. at level P3 of Hilton Hotel. For those who are staying at Alof Hotel, please wait for the shuttle bus at the Alof lobby around 8 a.m. We thank you once again for your presence and have a good day.